Okay, in this video we are going to learn depreciation. A company acquired a second-hand machine on 1st April 2002 for 60,000 and spent immediately for overhauling 16,000 and installation 4, means this 20 and 60 is 80,000. On 1st October 2002 another machine was bought in the same year 2002 and the machine purchase amount is 20,000, and on 31st March 2004 the first machine was sold for 60,000. On the same date the company purchased another machine, means third machine, for 70,000 and spent for 5,000 for installation, total 75,000. On 31st March 2005 the company purchased on 1st October, means second machine was sold for 16,000, and it is practice of the books to depreciate the machine 10% per annum on state line method, means original cost one time, which on the original cost what calculation we have got for depreciation, what amount, that amount should be deduct for every year. That is state line method, original cost method. Fixed installment method also mentioned, also said. Company close its books of account on 31st March every year, means definitely starting from 1st April. Show the machine account and depreciation account also till 31st March 2006. Okay, so let's start. Okay, machinery account. What we have got: 1st April 2002. 1st April 2002, what we get? 2 bank. Machine, in machine account, machine we cannot write, so that's why 2 bank machine 1. The amount is 80,000, 60 plus 20, 80,000. And the same October 110 2002, sorry, 110 2002. 1st October 2 bank second machine was purchased and that amount is 20,000. Okay, 31st March 2003, means next year, by depreciation for first machine is 20,000. Sorry, 8 means 8,000. 80 means 10% means 80,000. Okay, 80,000 into 10%, 8,000, and by balance carried down amount is, means total 80,000. After deducting this 8,000 from 80,000, this 8,000 should be in red. Here what you will get, 72,000. Okay, this is for machine 1. Now for machine 2, by depreciation for 2, 6 month depreciation means 20,000 into 10% into 6 divided by 12, we'll get 1,000 depreciation. Then by balance carried down amount, total overall 20,000, we'll get 19,000. Okay, now close here 1 lakh overall, here 1 lakh. Okay, 1st April 2003 to balance BD brought down, this for first machine. How much is the balance? 72,000. And to balance brought down second machine is 19,000. For the next year, 31st March, so March 2004. This is a 2003 April. This one is a 2003 April. Here is it to 2004, 3 to 4. Okay, what we are doing, by depreciation first, calculate the depreciation for 1, how much, always 8,000. okay, now selling also, by sale, first machine we are selling for 60,000. let's calculate whether balance profit or losses. Say from out of 72,000, here you can write, okay, less 72, deduct 8,000, what you will get, 64. Out of 64 you are selling only 60,000, means by loss only we will get, by loss from first machine, how much, 4,000. here nil, it's gone. Okay, this is the depreciation amount, this is the loss amount. This machine is finished. Okay, go for second, by depreciation second, how much, 20, or the original price was 20,000. on 20,000 we have to calculate, so come down, it's 20,000 for 2,000, 10% means by balance carried on. Present we have 19,000, right here 19,000. this is the depreciation amount. Here we will get, after deducting, 17,000 only. Okay, at the same year 31st March 2004, we are purchasing one more machine. Two bank 3, and it will be 75,000. for example, 70,000 plus 5,000. okay, so by balance carried on we have to put by balance carried on, amount is direct 75,000. okay, at the end of the month we have purchased, that's why we don't calculate any depreciation for that. okay, write the total amount, calculate the total. So 1,66,000, 1,66,000. now take, this is the 31st April, now 31st March means 1st April 04. 1st April 04 means to balance brought down. To balance brought down means the amount, first we have left first machine, we have sale, here take third, second machine, this for second, okay, only we have second machine now, second and third, so 17,000. okay, to balance, here take third machine, we are still 75,000. okay, 31st March 2005. On 31st March 2005, what we are doing, by depreciation for second machine, how much, 2,000 should be there. okay, so it's, we are selling on the same date, by sale amount is 16,000. we'll get profit or loss after this is 17,000 minus 2,000, 15,000 minus, we are selling 16,000 means we will get profit. So right here to profit. To profit. How much? 1000. How will get profit? 17,000 minus 2000, then minus 16,000. Okay, we'll get the profit. Now this nil. Second machine we have over, this is depreciation. I'm putting this one in red. Now the third machine, by depreciation third, 7,500, by balance carried down, 67,500. Sorry, this 75,000. Here you will get, after deducting 67,500, you will get. Okay, and this should be put in red for because of the depreciation. Now make the total. 70, 80, 92, 93,000. Okay, otherwise you can also put this amount outside also. I am just putting this amount inside, but you can put this amount outside. Okay, carried on amount, this is the sales amount. Okay, 60, 70, 80, 3 changes amount. By depreciations amount, I'm just putting inside, or you can take this one amounts outside also, we don't have problem. Just for clearance purpose I'm taking inside. Okay, 70, 80,000, 91,000 you will get here. But 91,000, what you have to do, this depreciation should be outside. Okay, that's why I'm not putting this outside, otherwise I can also put this outside, and this will get easily. Here also depreciation amounts. Okay, 7,500. now see, easily you can get 93,000. Okay, but sale amount also you have to take here, that's why then you will get. Now the second machine also sold, so let's come to the 1st April 2005, to bank third, sorry, to balance brought down third, the amount is 67,500. 31st March 2006, by depreciation third. How much is the depreciation? Directly you can take outside. 10% is 7,500. After deducting 7,500, by balance carried down, means 7,500 and the amount is 67,500. balance carried down amount is 60,000. This I'm taking in as a depreciation, because of depreciation account we have to prepare, that's why, to get easily. Okay, this is the closing amounts. 67,500, here also 67,500. Now go for 1st April 2006, to balance brought down 60,000. This is the ending. This is how we can prepare machinery account for depreciation. Now prepare for depreciation account. Depreciation account. Okay, what we have to do, start with 1st April 2002, particular to machine 1 and 2. To machine 1 and 2. Total amount of depreciation is 9,000 first year, 31st March 2003. What we will write here by P&L. $9,000. First April 4. Okay, 3. 2 balance brought down. $9,000. Here 31st March 4 by balance, by P&L. By P&L you will get how much? 9,000. So second year it's 10,000. Okay, now 1st April 2004 to, don't take balance brought down, you can take to machine 1 and 2, same to machine 1 and 2. 4 to 5. What is 4 to 5? 9,500. 31st March 5 by P&L. First April 2005 to machine 1 and second, means 5 to 6 we have taken only 7,500 depreciation. 31st March 6 by P&L we have taken 7,500. This is the way where we can prepare depreciation account. This is the way where we can prepare machinery account in depreciation.